Hello everyone. As you all know, in the recent T20 World Cup, the Indian team emerged as champions. The whole nation celebrated the victory. Lakhs of people came out on the streets to celebrate. There was music, dance, and fireworks all around. It was one of the happiest and emotional moments for this cricket crazy nation. Now imagine, if you are part of that squad, even a small part of that cricket squad, how elated and thrilled you would feel. By the way, India is winning in other fields too, in terms of stock markets and in terms of economy. India is growing faster than its peer countries and gaining ranks in terms of the size of the economy and the size of the market cap. If you want to be part of this squad, you can participate through large cap funds. Presenting the Bajaj Finserv large cap fund, which invests in these corporate leaders, corporate champions of India. These are businesses that have delivered strong growth, generated healthy profits, and created a huge amount of wealth for investors over the years. What are the benefits of investing in large cap companies? According to SEBI classification, the top 100 companies by market cap in the country are classified as large cap companies. These companies each have a market capitalization or value of more than 80,000 crores. There are many benefits to investing in large cap companies. The first is stability. Large cap companies are large businesses with large balance sheets. A small downturn in the economy or a slowdown doesn't make them vulnerable to the business cycle. The second advantage is lower volatility of their stock prices. Large caps as a category typically are less volatile than mid caps and small caps. In a drawdown, typically large caps fall less than mid caps and small caps. The third advantage is many of these companies have a long track record of dividends. Since they are large companies, they generate good cash flows and they distribute it for the dividends to investors. This adds to the investors' return. They are also well researched. A lot of analysts and market experts cover these large cap companies. So you are ensured of transparency and good information. Now a lot of people tell me that for growth, investors are attracted to small caps. That is true. But in a country like India, where the nominal GDP is growing at a strong pace of 10 to 12%, there is huge runway for large cap companies to also deliver healthy growth. Now connected to this, there is another important strength of large caps. When a country is growing, like India going from emerging market to someday a developed market, the country needs businesses to take up large projects. Large companies are able to raise capital and resources at a low cost to take up these projects. Overall, combining these benefits, it is beneficial for investors to consider large cap funds in their portfolio. Another question that may come up in your mind is that why invest in large caps now? Over the past 3 years, Indian markets have seen a very significant rally in stock prices. Especially in the last year, a lot of mid caps and small cap companies have delivered fantastic returns. They have outperformed large caps by a good margin. Specifically because of that, a lot of mid cap and small cap companies are now trading above their fair value. Hence, for a better risk adjusted returns, large caps today provide a better opportunity than mid caps and small caps. Can there be a correction in large caps too? Yes, corrections are part of the equity markets and part of any rally. They are difficult to time. As I said earlier, large caps typically have lower drawdowns than mid caps or small caps. However, there can be corrections. For a short-term investor, corrections become a problem. For a long-term investor, corrections can be an opportunity. Hence, while investing in equities, a long-term time horizon is absolutely essential even for large cap. Why should one invest in Bajaj Finserv Large Cap Fund? At Bajaj Finserv AMC, we are launching a large cap fund which will select 25 to 30 companies to create a portfolio. These will be high conviction bets and the portfolio will be fairly concentrated. With high concentration, we will be able to get higher active share. Why is high active share important? Active share, in simple terms, measures the difference between the portfolio and its benchmark. Imagine you are running a race against someone. If you are running extremely close to the person you are racing with, it is very difficult to really outperform that person or finish ahead. The same way, if the portfolio replicates the index, how will it outperform the index? Active share is important in creating an outperformance. Active share is a necessary condition to outperform. It is important to have a distance from the index, but it should be a positive distance, which means the selection and the allocation of the portfolio should be right. At Bajaj Finserv AMC, we have an in-cube philosophy and a unique process that uses information, quantitative and behavioral edge to help us select the right companies and also put the right weightages in the portfolio. With good selection and good portfolio construction, accompanied with high market share, we will endeavor to outperform the benchmark. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.